Hi everybody and welcome to the video. Today I'm going to be talking about the results of the first week of my FTMO £20,000 funded trading challenge. So without further ado, let's dive into how I did. So for the first trade I did, which was on a Monday night, I chose to try trading with Solana, the cryptocurrency. I was using a fair value gap strategy that I'd been testing a little and I'd found I'd had some success with it, so it seemed quite logical to use that when I saw what I thought was a good opportunity. It ended up that I was literally 7p off my target profit amount, and then suddenly the biggest red candle came along and the price just absolutely plummeted after that. And ultimately, this ended up being a disastrous first trade, as in total I lost £106.86. So, not a great start at all to the challenge, if I'm being honest. So after that first trade, I took a little time to sort of dust myself down and revise my strategy throughout the rest of the week. I decided that I wasn't going to trade Solana going forward anymore, as it was prone to too many random price swings in my opinion, so I just decided that it didn't work for my strategy anymore. I chose this time to trade Ethereum, which is another cryptocurrency, and throughout the week, I picked up another couple of confluences that I could use, being the RSI index and the moving volume average. So I made my next trade on the Friday evening, which was a few days later, and this time I incorporated both of the confluences RSI and volume moving average, and as a result of a more calculated and careful trade, this time I made my very first profit of £19.06, and it's definitely not much, but it gave me a massive confidence boost. So RSI stands for Relative Strength Index, and this is a tool which is used to help measure momentum. As you can see, I've circled the graph in the slide, and the line chart is important because it shows you, it gives you an indication of the buying pressure and the selling pressure. So if the line graph is above 70, it's likely that a reversal might be incoming. The buying pressure is high and the price is likely to go down. Whereas if the line graph is at a value underneath 30, it is likely that the price is going to show a reversal to the upside as the selling pressure is high. So this has proved to be a really important tool for me so far. Another tool I use is the volume bar moving average, and as you can see I have circled this in the image in the slide, and this tells you how much of a stock or asset was bought in a certain time frame. So the image above was taken from a 15-minute time frame. The blue line shows you the moving average and tells you, as you can see at the side, so the dark blue inside the red circle at the right of the image says 17.85k, and that is the average that is being bought of that asset. And so far underneath you'll see that it says 178 and it's in green, and that shows you that so far within that 15-minute block 178 of that asset has been bought, and it also tells you that that is a green candle as it stands. So I'd made my first profit, which was really good, and then I made a crucial mistake. I think it's fair to say that the first profit that I made went to my head a little bit, and For whatever reason, I decided that £19.06 wasn't enough of a profit, so I entered my third trade because I felt like I wanted to end the session with a little bit more, and as a result of that impulsiveness, I ended up losing £70.57. This is a direct result, guys, of trading with emotion. And I didn't allow my setup to present itself. I just traded with emotion, and that's something that you just cannot do. Risk management is huge in this, and you cannot be emotionally trading. You really need to understand the risk and build up some discipline to avoid that happening. It's fair to say that my confidence was low after the previous trade. However, I picked myself up and I dusted myself down. And the following day, on the Saturday evening session, I entered my fourth trade. However, this time, I waited for my setup to present itself. And as a result of being more careful and more disciplined about this trade, I managed to make a profit of £17.11. However, the key difference, everybody, is this time I did not continue trading. I stopped. I realised that £17.11 is actually a really good profit, especially when I've just started with day trading. So I didn't get greedy and I stopped there, and that's really key. It's good to stop. If you profit, I would recommend just stopping, because that way you ensure it's psychological in the sense that you've profited and you've got something to build on for the next trade that way. Having renewed my confidence from the previous trade, I came back to look to enter a trade again on the Sunday evening session, and again I waited for my setup to present itself, and I was using further knowledge that I'd learned over that weekend, such as liquidity sweeps and fair value gaps. My first trade made £19.84, and maybe I should have stopped there, but I saw what I thought was another opportunity, and it turned out it was. So my second trade made me £12.59. Not massive profits in themselves, but every little helps, and at this point it was about just trying to keep the profits rolling to boost myself psychologically. So overall, I was really happy with these two trades. Overall, at the end of week one, this is what my dashboard looked like. I ended up making a total loss of £108.83. And on paper, that doesn't look very good, but I was actually really pleased with this, as I made almost £50 back over the weekend. And, you know, when I initially lost that £159 roughly, I was down to about £19,841. And at that point, I'd resigned myself to the fact that I was going to fail the challenge. So to me, this was massive, recouping that £50. So I was really happy with this first week overall. The main things that I learned from my first week of this challenge were narrowing down the assets that I wanted to trade. So no more trading things like Solana that I didn't feel fit my strategy, or I felt that I didn't understand properly. I narrowed it down to just Bitcoin and Ethereum. I managed to improve my strategy and ideas around trading, adding things such as RSI and volume moving average. A big one that I learned was not to take trades based on emotion. That's really key. That's important not to do. And finally, the last important thing I learned was to wait for my setup to present itself. Also, the key psychological factors that I picked up from the first week of my challenge. Well, number one, I felt more confident as I came out of the week with more winning trades than losing trades, which I wasn't expecting to do. And number two, I developed better discipline, which will hopefully allow me to make more careful trades in the future, in the sense that I waited for my setup to present itself, and I gradually stopped trading based on emotion and rather on analysis and what I saw. Thanks for watching the video, and if you enjoyed the content, please be sure to like and subscribe to my channel and turn the notification bell on to see how I progress in this challenge. It's definitely going to be a rocky road, so stay tuned, as I'm really looking forward to seeing what happens, and hopefully you enjoy seeing the progress that I make. Thank you, and until next time, have a good one.